a discount. A couple of weeks ago, we did this video. This, of course, had Canary Capital, Stephen McClurg on it. And in this video, what it broke down was the issue of fees coming from banks, meaning remember that your Plaid connection between a lot of these digital services is now going to get a fee. And this is going to happen in all areas, but specifically, we're going to see it in the crypto market, meaning if you were trying to move something to Gemini or Coinbase or Robinhood, eventually there's going to be a fee there that would slow you down. This is what they were talking about, and now it is starting to happen. Here is, of course, Tyler Winklevoss breaking this down. My tweet from last week struck a nerve. JP Morgan told us that because if they were pausing re-onboarding of Gemini customers, they're going to offboard us during the operational, change here, which is where they're going to start charging for, fintechs like Plaid, et cetera. This hurts all those kinds of companies, and it puts a little bit of a slowdown in crypto onboarding. Now, if you've got cash already in these places, that's different, but if you need to move cash into them, we're going to see fees coming up in the future. Let me know in the comments, would you guys pay a fee on your side? We may see this fee being paid by the other side when you're still having it, but it is going to slow things down because what we've seen with Plaid and things like that in terms of transferring money, it's almost been instantaneous. This is a clip that breaks down, well, actually, let me show you something. This is what it's going to look like inside one of these wallets. Add a payment method, deposit or withdrawal, and then you're going to have to go in and actually go wire transfer. That's the route you're going to have in terms of options. So really limits you in being able to not collect or connect directly to your bank. This again gets back to kind of this version of choke point 3.0. Now, what are these fees going to look like? Well, you've got them right here, JP Morgan, Wells Fargo. These are the kind of scenarios that are going to play out: incoming, domestic, outgoing, domestic, etc. Fees across the board, all of this coming at the industry, and a lot of investors, I think, out there who have been investing in this space for a while understand this is big banks continuing to turn the knife, and I think this may end up snake biting them in the future. And the reason is you're going to have companies like Robinhood, who's already started to move into their banking strategy, talking about launching this in the fall. Here's a little bit of a sneak peek. This will be a welcome sight, I think, for many people under the age of 40. And what I mean by that is that when you look at this next generation of investor, savers, and people using finance products, they are starting to look at alternatives. We're already seeing this across the board. And in fact, I think we're going to see this accelerate. Robinhood cannot get here fast enough with their program. All right, so the point behind this is there's going to be a lot of other people that are joining them, other companies that are joining Robinhood and others for these banking licenses. Of course, BitGo, Ripple National Bank or National Trust Bank. And then, of course, you've got Circle right there, First National Digital Currency, Erebor, which is a Peter Thiel organization that's going after almost a neobank concept, Fidelity, and the National Digital Trust, all of these of which are next generation banks, all filing for a banking charter. This is going to put a lot of pressure on the existing banks. So what has happened out here is the OCC is saying, hey, the banking system is well embraced or well positioned to embrace crypto in general. And for the most part, I think they are going to proceed down the normal process of approval. The issue that's starting to brew right now is that JP Morgan and many others are trying to circle the wagon, so to speak, and develop other alternatives. One thing to point out right here is JP Morgan is saying that they're going to test blockchain stablecoin services for these institutional payments. But if you look at some of the things that really align here within the Genius Act, let me kind of zoom up on that. Genius Act distinguishes between deposit tokens from payment stablecoins. So payment stablecoins right there, designed to be used as a means of payment or settlement. Then you have deposit tokens right there, which are for deposit banks. These are explicitly issued or excluded from the definition of stablecoins under the Genius Act. So this starts to change the dynamic here. Now, I want to go to a clip because this will explain why we believe that Diamond is absolutely against stablecoins. Take a look.
Utilizing, leveraging, competing with stablecoin, and how the JPM-D deposit token feeds into all of this as well. Thank you.
Yeah, so a deposit token is effectively the same thing. You're moving money by token. You could pay interest. We don't know exactly, and I think they're real, but I don't know why you'd want a stable coin as opposed to just a payment. But I do think you have fintech. These guys are very smart. They're trying to figure out a way to, create bank accounts to get into payment systems and rewards programs, and we have to be cognizant of that. And the way to be cognizant is to be involved.
Okay, super.
All right, so you can kind of see, he says you don't need them. We realize they're real. Well, you do need them if you're going to see yields and potential engagement in different kind of platforms, whether it's DeFi or a lot of these alternative markets out there. It's not only JP Morgan, it's also Citigroup talking about considering issuing its own deposit token. Let's get away from using the term stablecoin. That's not what they are. This is coming from their CEO. Now I want to go to this next clip, which is where they have a whole issue of where JP Morgan is actually, he's kind of gaslighting people around this open banking concept. Take a look.
And then separately on the topic of open banking, I think that's on hold right now with the CFPB. Does this hold period give you an opportunity to change how you're pricing for your open banking and fintech relationships here?
So this is very important. So if we get pricing for a second, we are in favor of the customer. And if you see today, a lot of these scams and frauds, run through third-party social media and stuff like that. There should be a little more responsibility on their part. That's why.
Excellent. Okay, thank you so much for that.
All right, so now he's calling many of these companies have been around for over a decade scams. And the point is that they continue to put these barriers up because they know that the end is near. One of the things that Citibank, this is coming from one of the reports from Citigroup, actually says this out in the open. And what they're saying here is that if you group together, this is Bank of America and JP Morgan and others, you could very quickly create a whole alliance that would be impenetrable by these new entrants. So think of Gemini, Robinhood, Circle, Ripple, etc. This is a little bit of the thing, because remember, they did this with Zelle. And this is the issue, because to me, this is what needs to happen for all the benefits that they're talking about to stay locking you in their ecosystem. This gets back to the point of holding customers hostage instead of giving the ability to move around in different financial systems. And as we see all of this take place, guys, this is a big, big deal. This could be choke point 3.0 hidden inside of the Genius Act for helping these big banks hopefully defend off. Now, can they hold it for long? That I don't know, because it will all depend on the OCC and how quickly they approve these banks. If they approve them quickly, then it's a different deal. One thing that happened a very long time ago was Brad Garlinghouse actually foresaw this. Look at what he said. This is the case against Bankcoin, what he called it. This was August 24th, 2016, guys, 2016. And he kind of goes into it. He's talking about Deutsche Bank, Standard, BNY, all that. And then there's Citicoin, and guess what? Goldman Sachs, and even their Settlecoin. So the point being is he knew this was coming. This was just a matter of time. A couple of things had to happen, though, to make all this work. One, the regulation had to happen. We had to see POTUS get into office, restructure crypto. That's been done. Then we had to see the Genius Act get through. Now that's been done. Stablecoin is underway. Now you have to go in through the process of these charters. All of this is now underway. And what's interesting to me is the banks didn't foresee this coming, so they had to rely on other methods. One of them, and this is where Garlinghouse kind of goes in and roasts JP Morgan a little bit, and I'll explain why and the tactics they're going to try here in a second. Take a look at this.
I think it's great for the blockchain and crypto industry to have players like JPM leaning in. Thumbs up. Yep. That's great. That's the only nice thing I'm going to say about this. So is Morgan Stanley going to use the JPM coin? Probably not. And so, well, is Citi going to use the JPM coin? Is B of A going to use the JPM coin? Is PNC? And the answer is no. Does that mean we're all going to have these different coins? And does that mean we're back to where we are, where there's lack of interoperability? So I don't get it. One more quick thing on the JPM coin. They announced for institutional customers, if you give them $1 in deposits, they'll give you a JPM coin that you then can move within the JPM ledger. Wait a minute, just use the dollar.
Right.
Well, I really don't understand. If you're just moving it within the JPM ledger, and it has to be dollar to dollar, a one-to-one backing, it honestly doesn't actually, I don't understand what problem that solves. Look, if it solves the problem of JPM being associated as they're leaning into crypto, yay. Mm-hmm. That's all I got.
Right.
As you see right there on that, this is pretty much a PR stunt from the banking industry. The problem is they're getting into an era of next generation investors and banking customers that already kind of see through this froth. And I think that is a factor. They're either going to have to change their ways at some point or they will die. And the reason they're going to die, well, it's things like this right here. This is Aave. And we had Standing On the other day that kind of explained this. This is RLUSD. Average APY right now, 10.19%, guys. There is no bank in the world paying those kinds of yields on a stable product like RLUSD or USDC or USDT. Those are the kind of things that are happening in DeFi right now. Ripple, if you take a look at their stablecoin right now on market cap, continuing to climb. This is just the beginning of where this is going. Expect a lot more. Other things that I want to hit on right here, right there, right now, Aave RLUSD, 9.5. XRP Ledger integration, borrow, stake, and swap, that's coming. When we start to see that, you're going to see another explosion in terms of how assets are moved, especially into DeFi. I think Aave is going to be a big part of this. Then, of course, you got others out there paying ridiculous amounts of APR right now. So the point is you've got a lot of markets starting to open up to stablecoins and the interoperability of things like RLUSD, USDC, et cetera. So let me go to one more clip. This is Charles Hoskinson, Cardano, breaking down why the Dino tokens will actually benefit from all this. Take a look.
Is that the dynamic with some of these other like I don't know how you feel about this term, but like Dino coins, like, you know, there's when the market really pumps, like you guys pump, Ripple pumps, Hedera pumps, Algorand pumps.
Yeah, what was really cool is like the Japanese buy and hold and they just never sell. 50% or more is still sitting in Japan. So it's about $15 billion. And they sell, they get a 55% tax rate. So here's why it's going to supercharge DeFi.
Oh, so they just never sell because of the tax rate.
Yeah,
so
they just hold it. So, but basically if you make a yield product out of it where they lend their ADA, create a stable coin and then do that, then they're not selling, right? So once those DeFi markets turn on and the Japanese decide to do that, like instantly the TVL goes to like.
Okay, so Charles, I agree with you. Think about this right here. This is a good example of this. If it suddenly costs you $10 to move $100 into Coinbase or Robinhood, fewer people possibly would do it. Or if it costs you $10 to get a cheaper from FinTech, maybe you'd be forced to take a crappier one by JPM. So this is a problem because it starts to move into holding customers hostage. I agree with this statement. This is a problem for banks. Now there's two things that can happen here. The banks can eventually open up to this, but how much damage have they done versus embracing it in the beginning? It's still old school thinking. That's the problem right now with old school banking. If they would just move forward, there's no telling how big and how great they could be and how easy it would be to maintain that customer base that they already spent billions, if not trillions, to obtain. All right, so with Ripple applying for the banking license, the reaction was the BPI. This, of course, is the Bank Policy Institute. They are a lobbying group. They represent 42 different banks. We'll explain that in a second. But here's what the letter said. If you go further on down here, and they're talking about this deadline, because the deadline, August 4th, you'll see it right there. This is an insufficient period of time to meaningfully consider or comment on the application in light of the novel activities in which the applicant seemingly poses to engage. The applicant may implicate major legal and policy questions for the first time and therefore requires more time for review. In other words, they're stalling. Further into that, they go down here, and it's kind of interesting. This is a high-level generic description. I love this. Proposed by activities does not provide adequate information about the operations to allow public to evaluate these potential problems, risks, legal policy, all of this. It's going to blow up. And the reason it's an OS moment for them is because of this right here. Let's take a look at the Policy Institute. Well, there's Jane Fraser, CEO of Citibank. And who's this guy? Who's that guy? That must be Jamie Dimon. He's right there in the middle of all this. Of course, guys, this is a strategic move to delay, defend, deflect, whatever you want to call it. The OCC is going to approve this. It's all about the timeline. Add another 60 days, add another 30 on top of that, because you're going to see this little dance start to happen. And what it boils down to is maybe a January 1st or earlier launch of what we're going to see, and that is the Ripple banking system being approved. So 156 days on the outside. On the inside, we could see much faster. I hope that is the case, but more importantly, I hope that banks start to realize that you are much smarter and that the next generation of investors and bank customers are extremely savvy of what's going on. I think they are a little bit blind to all of this, so it's a big one. All right, so you guys make sure and leave comments below. And I think one of the things you should be doing is start to check with your own banks. What are they doing? Are they starting to implement these fees on you? Speak up. Let them know you're not happy with those kind of things. And I think the opportunity to educate them, the more customers talk to them and start to hit them on social, maybe, just maybe, they'll change their ways. We'll see. I don't think they will. I think there's a next generation that's in front of us, and it's all happening right here on the blockchain. You guys make sure and subscribe to the show. If you're not in the Diamond Circle, get in on that right now. That's our own private email list that goes out to you with additional research. Follow me on X, @Paul Barron. We'll catch you next time right here on The Paul Barron Show.